Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Wednesday, the 16th of November, 2022, 6:40 p.m. Central Time. You'll notice I got a cup of coffee. I could use it. I'm tired today. I get up 2:30, 3 in the morning, and writing, it's hard. But as you look at the markets, I'm going to have a live webinar tomorrow. So at 12:15 p.m. it opens, 12:30 it gets going. A lot of you have written me different charts you want me to cover. I'm putting them all in, getting them ready. We will be fast-paced tomorrow. It's going to be a lot of fun. It's a 20-minute long webinar. It's free. All you need to do is register. Now, if you haven't gotten an email from me, you're not going to get one because you're not on my mailing list. Just simply come up here, give a click here, register. It's that simple. You will get, after you register, an email from us immediately. It will have your user ID, password, and the link to get into the Zoom meeting. I want to see you there. It also has an area if you want to write any questions of me. You can do it there. And during the webinar, you can write me, but I'm not going to create a lot of charts for you during the webinar if I don't have the question ahead. It's too hard. I'll answer technical questions, things like that. But when people come in and do this chart for me, do that, not going to do it. You have now to do it. Does that make sense? The reason is that I'm not trying to be difficult. Spiders, ETFs, and stocks, there's so many thousands of them. Whereas futures, there's 40. I've got those all open on my charting software. You don't have to do anything on the futures. I've got them all for you. It's the others that I need help with. So as I said, if you take a look here, it's very fast-paced. It's a lot of fun. We'll cover some fundamentals. Remember, the Bank of England, we're going to know what they're doing tomorrow. We'll be talking about CPI, what's been going on there, PCE's coming up. What do we think's going on? Is the dollar made a major top? Things that we should be talking about. One more time, all you do is click the top there. You'll see the icon, and away you go with that. So now let's go to the marketplace because we're getting what I call consolidation. And that was the key word I've used the past few nights. You're going nowhere suddenly in stock indices. You're waffling could be a very good name for this, as the market's trying to figure out what is the next move. The only market that looks to me still strong of the group as a technician is the Dow. And that's a problem. I want to see leadership from big indexes, ones that are made up of big amount of stocks, the S&P 500, the Russell. I want to see those type join in, the NASDAQ, not the narrowest of the indices, because that can give you a false sense of security. Just be careful with that. When you look at the bonds and notes, the curve yield's done this. The short end just keeps moving up because the Fed's not going to stop. The Fed is, if you call it a pivot, they're going to pivot between 75 to 25 basis points until they think they've got the game beat. Everybody's coming out. In my newsletter that I put out for my full research subscribers, I keep giving a section I call Fed Talk, and every day there's a new Fed speak, and I highlight what they're doing. To a person, they're talking rate increases. Now, that not the size, just continuing to go. Right now, the consensus is 50 basis points will be what we get in December. I've written that myself. I think that's where you will be. And I am not good enough to say, well, the first quarter of the year is going to be the end of those increases. Why? Because you think so? The data is what they're going to look at. And the data is not collapsing. The data is showing the first signs of weakening. There's a long way to go from nearly 8% headline inflation to 2%, and from core, which is always stickier inflation, down towards the Fed's goal of, let's call 2.5%, 3%, something in that area. You've got a ways to go. And I know what you're going to tell me. Nah, the Fed will move ahead of it because they know it's going to do this. No, they won't. No, they won't. They'll do their best to time it, but it's not a science how to do that. It's an art. And the history is they overshoot. So understand that. JP Morgan today came out, said they expect the market to be in a recession now. I happen to think we're in one already. Goldman said they're looking now for 5.25% to be the target as to where the Fed might stop. Well, that's a few more rate hikes. We'll see what goes on. Remember, you get one piece of hot data that reverses the soft data we're getting. I don't know what got in my eye here. And that changes everything. Okay. So as we come to the S&P, we're fighting at the 18-day average. The first test of it, can it do anything with it? I don't know. You can see the consolidation. This is why I said, and I said it early this week, actually the beginning of last week, that I thought that's what might happen. And boy, is it ever happening, just back and forth right there. You can see how it's gone through there. I'm trying to figure what could come out to lift the market. I can't figure that one out, so we'll see what goes on. And the reason I say that is the Bollinger Band's right here. I think the market is caught fighting between, and that's what I think will happen, the 100-day average is supporting that. But there are bullish things happening here. Take a look at the 18-day and the 100. That's bullish. If you take a look at year end, both the Dow and the S&P have a strong tendency from November, right where we're at, into the end of December to rally. And by the way, that's not necessarily the Santa Claus rally. The Santa Claus rally goes into January. So it's longer than people think it is. You tie it because of Santa and you go, oh, the end of December, Santa's on his sleigh and left and that's it. No, it goes longer than that. So please keep that in the back of your mind. Did I mention here, by the way, that we now have at least NBC I said that they have declared a winner at the House of Representatives, and they have given it obviously to the Republican Party. So we have a split Congress. We'll see where it goes in the Senate. There's still more races to be decided there, but there's enough seats now where the game is over at the House. Bye, Nancy. Bye-bye. All right. Higher lows, higher highs. We'll see where that's going to carry the market. Looks overbought to me. When we take a look at the micro NASDAQ, you're up to key resistance. You don't buy the first challenge. At least I teach you don't buy the first challenge of a 100-day average, or for that matter, the 200. I back away when they haven't been hit for a while, especially when they're right with that number. That doesn't mean they'll break from there. They're going to stall typically. And from there, you try to figure out what's happening. Well, what's happening is you're overbought. You're not embedding. You overbought conditions correct in one of two ways. Prices either drop back and this corrects down and get both numbers ideally under 70, and or they go up again in price and it embeds. Well, you're not trying to embed at this point. This is the strongest of the indices. It won't take very much for this market to lose that embedded reading. The way the trajectory is going and the math, it starts putting pressure on it. It needs to get up and make a new high. Bull markets need to be fed. So this market's got the support here. The resistance is crystal clear at the upper band. You get a reading under 79. Be careful. I think you're going back down here. You've had a bullish crossover. Everything on this chart longer term is friendly. And this is one of those seasonal charts that typically goes up, like I said, to the end of December. Now, it's not every day is an up day. You look at the day the seasonal begins, you look at the end of the year, you go back and you look in time. 14 out of 15 years this has happened in recent times. I know you'll tell me this year it won't happen. Okay. When you come to the Russell, look where you're peaking. The first challenge of the 200 and the upper Bollinger Band. I'd leave that one alone too. Then in the VIX, we had a rally that took off into all this moving averages, ran into a buzzsaw right there, but you're not trending. You lost the embedded reading. So when you lose the way to the downside and you come up like that, another thing that often happens is you keep getting that. You keep getting more bid than offer. We'll see if that actually takes place. Bonds and notes. The market is saying, the Fed is getting closer. Maybe it's the second quarter of 2023. Maybe it's the third. They're getting close to where they're going to be able to stop raising rates. But that doesn't mean that between now and then they don't go up. But which ones will that impact? The shortest term. The longer term are starting to stall out. That's good news for homes. This is one of the reasons that if you've been looking at the home builders, they've come back a little bit here. They're seeing that pressure might be coming off them. At the same time, certain parts of the market, home prices are falling. At the same time, we have No big supply of homes on the market to outweigh it. It's a question of price and financing, not supply in most cases. If we take a look at the 10-year note, it's identical to that. Then we come to the dollar index, which is continuing to work its way down. Get a good rally here, and I'm still bearish. I'd be telling my traders to sell the rally in the market. And there's a way to do that off my enhanced Bollinger Band course. In the eurocurrency, moving like that. By the way, I just mentioned that course. I am really hard at work on my outside day course. You know, outside days are one of those common chart formations you get. Do you know how to work with them? I mean, it's so simple. It's right in front of you. I'm going to teach you. I've been doing a mixture of them. I did GameStop as one of the samples today for the sell side. S&Ps, I believe I did on another one of them. I'll give 3 examples of sells, 3 of buys. Then I'll wrap it up with different parts to it. I think you're going to love it. Another tool for you to use. And you'll see what I mean by that. I'm not going to go any further. I am hard at work. I want this to be done, ideally, by Thanksgiving, believe it or not. So you can imagine I'm really hard at work on it now. You're in the euro, still bullish, still an embedded reading. So here's the answer. I believe the pros will continue to buy, looking for the upper band until the red line closes under 79. Then I'll look for price in the 18-day average to very possibly come in here and make a run at each other. In the British pound, I'm going to repeat. I think, why would you go in? Let's see not only what is said by the Prime Minister and his exchequer, the Chancellor of the Exchequer. You wait and see how the market responds to it. Market has responded beautifully to the ideas. It's come off, as I said, the 103 area all the way up here, but let's see. In Bitcoin, it ain't over, folks. There's going to be more firms that go bankrupt. You're reading about them already, okay? When this happens in an unregulated environment, I have one piece of advice for you. I'm going to repeat it. It's not about the company. It's about you. Protect yourself. If there were guarantees in place, be it the exchanges that have real capital and all the members behind them the way that they do it in the futures at the beginning, and I'm going back into the 70s and 80s, okay, because there wasn't the government assurances there, that worked. You don't even have an alliance of these people. They're cutthroat to each other. You know, that's what they are. Where are you protected? How do you know that you don't wake up in the morning and what you think has value you can't even get your hands on? And that's happening. Some of the different cryptos are now saying, no, your money's secure, but you can't have it. Then it's not secure. You can believe whatever you want, okay? It's not secure. They're telling you that for a reason. They can't pay you out because they don't have the cash to pay you out. It's tied up in some way or it's gone. I don't know which, but my experience, and that's all I can say, that's generally a pretty good thing that happens. You got to learn some of this. In Brent and WTI, they're staying up here. They're still acting good. Tonight, I wrote a report on the energies because I'm comparing the projections of the IEA, the EIA, and OPEC in my written research. And I've been doing a lot of research this week for my traders. I hope they love it. A lot of graphs showing them what's going on, showing you the differences to where we're at versus when they say, oh, we're cutting 2 million barrels a day, and it really turns out to be maybe 30 million. It sounds funny, but it's true. But they're flat. And what is that going to do for supply-demand as we're there? Get my reports, subscribe, you get those things. We look then at the energy. They've been slipping back. I doubt you're going much under the Bollinger Band. You're approaching the 200-day average there, too. You've got key moving averages above you in WTI. None of these are bullish. Are you noticing? Does that look like bull markets to you? If it does, you better go back to school. These don't look like bull markets. Natural gas fighting its battle at the 18-day average because it's freezing. I know my wife's going to the Notre Dame game. I refuse to sit outside, so she'll be there this weekend. 26 degrees. You think I'm going to see the Notre Dame game at 26? Forget it. And it's a beautiful place to see a game, but it's outside. I prefer something else. So I'm hoping to see all of you tomorrow. You can register by clicking up here at any time, and we'll have a lot to talk about then. Take care.